physical demand coming into the COMEX, coming out of London, coming out of Switzerland. The demand is off the charts. The lease rate in London, which is typically 0.5%, rarely gets above 1 or 1.5%, even in times of stress, and then it would typically only be for a short period of time. The lease rate is the rate at which it would cost to borrow bars to short or to cover a position, is as high as between 5 and 6.5%. And that's an anomaly, to say the least. It signals great tightness inside of the market at the highest of levels. The amount of silver that's coming into the COMEX is off the charts. From a technical formation, you have a 45-year cup and handle that might be as powerful of a formation as you will ever find in technical analysis, especially one that is mature as silver. 45 years, and the way that it works is the beginning of the cup would have been 1980 at $50, and then it goes down to the bottom, the shape of like a bowl or a cup, to $4 or thereabouts in the early 90s, and starts to come back up to 2011, almost to the top of the cup, doesn't preach it, comes down in consolidation for the handle, and here we are at basically $44, very close to moving back up. Now, the way that works is once you breach that level, the top of the lip of the cup, the $50 level, first of all, there is no resistance at all. But the way technical charting would work is that you take the difference between the top of the cup and the bottom, which is approximately from 50 to 4, about $46. You would add it onto the top, and your next target upside would be $96, 96 to $100. Is that crazy? No, it's not. I mean, triple-digit silver is something one could expect at some point. And then when you realize that the government reclassified silver now as a critical element, a critical mineral, they've put a floor under the price of silver. And so I think, all of the talk over the last 6-7 months, and I said no from the get-go, this is not about tariffs, never was. It was a ruse to bring it all back. This is reshoring. This is understanding that the biggest money in the world understands the significance of things like silver. The biggest traders here in the United States, the institutional traders, when they start to pay attention, when they start to accumulate, we should all pay attention. We've been talking about this on a central bank level for a few years now, about the deliveries into COMEX for a few years now, about the accumulation by India, by Russia, by Saudi Arabia, by China. China flying around the world and buying doré when they're the second largest producer in the world, sending it back to China for refining. Why would the second largest producer of silver in the world find it necessary to fly to Latin America to buy concentrate and doré directly from a miner, pay double what the West will, ship it back for refining? If it were just this this rock that hasn't done anything forever. And I don't know, silver right now feels to me like gold did about a year ago, when it was right in the $2,100, $2,200 range, and it kept trying to break out and would, consolidate and try to break out, come down, consolidate, in a long period of consolidation, and then broke through, and it hasn't looked back. I would say that's about where silver is right now. I look at it as the most undervalued asset in the world, and now evidently the United States finds it significant enough to call it critical. I think there are very few opportunities asymmetrically where you have such low downside and such high upside, being asymmetrical. For an asset like this, it's once a generation. So I think the drivers are big money waking up now. You could argue that the public is not even part of this rally yet. What happens when they collectively wake up? This is being driven by people at the highest of levels before the public catches on, which is another contrarian indicator. So yeah, I think what's driving gold and silver is that silver is finally catching up. Gold is being rewoven into the monetary fabric of the globe. And thankfully, someone in this administration, I think, grabbed President Trump and said, if we don't do this, we will forever regret it. This is our last opportunity to bring some of this home, because the world is moving away from treasuries and dollars and paper promises, and then you add on to it sanctions and tariffs. After 4 years of nightmarish domestic and foreign policy, prior to this administration, you could argue a system that is fully based on trust has squandered the majority of it. And then, look, I would vote for President Trump again, but I don't agree with the way he is antagonizing even his allies, like India, as an example, throwing on 50% tariffs, and many of the other countries in the European Union and Canada. Maybe there's something bigger at play, which we've talked about a lot, but I think it's just beginning, quite frankly. Look, you have a comment coming out of Goldman Sachs a couple weeks ago that if the market even thinks that the Fed has lost independence, well, okay, the firing of Lisa Cook, who's going to go in there? It'll be a Trump bobo. You look at Stephen Murin replacing the last Fed official who left, who is the author of the Mar-a-Lago Accord. The Fed has lost independence. And mind you, this is nothing new. You go back through history, you'll see this happening with multiple presidents, but it's like they give you crumbs and the crumbs, well, we told you that this could happen. And now you have, banks talking as high as $6,600, $4,000 being base case for most of these banks. Look, you put silver at 5,000, like Goldman says, and divide it by 70, which would be, way higher than its average for the past 100 years, and still 10 times higher than it's coming out of the ground at. You're talking $75 silver or thereabouts. So, to me, this is just beginning, Elijah. Honestly, I do believe that, and I think this is the time that most of us have been talking about, as typically following suit way early. But I'd rather be months and even years early than 60-second late when the switch flips on this. It's easier to make money than it is to keep it. And I think a lot of people who have, maybe they're getting towards the twilight of either their career or of their lives, and they're looking at things that are unfolding here. There's a very deep interest all of a sudden. But to your point, yeah, the public is still largely anesthetized when it comes to the merits. I've talked, and I'll get to your question on the premiums, but I've talked at length with people like your father over the last few weeks, where we see all-time high participation in the stock market at about 55% by the public, highest ever, higher than the 1929 peak. Higher than the .com anytime. And along that same lines, you have the highest participation of the retail crowd in options ever, which is speculation, and the highest margin debt, over $1 trillion ever, which is leverage. So the public is all in on speculation and all in on leverage, as the insiders, Warren Buffett sitting on $500 billion in cash, Bezos selling $7 billion in Amazon since June 1st, the insiders at NVIDIA dumping shares, the board members, the insiders, Jamie Dimon, all of these people selling stocks, Zuckerberg, the insiders are selling at a 7-to-1 clip. The institutionals have been selling between $2 and $4 billion a week since June. And so you have the insiders with the information leaving, and the public all in on leverage and margin and speculation. And then the other end, you have deliveries coming into COMEX that no one has ever seen before. At the same time, the public has zero exposure to it. So you talk about a contrarian indicator on both sides. It's enormous. The premium thing is the strangest thing I've ever seen in my career. You're right. The Eagles are going up, both gold and silver. The U.S. Mint hasn't made any platinum Eagles in at least 2-3 years. None this year. We'll see if they make them next year. The rumor is they're not. Platinum is very similar to gold in terms, in my mind, of its manipulation, its setup. You have the head of the Japanese Tokyo, the TOCOM, Tokyo Commodity Exchange, who says, look, London is trading 3 million ounces a day of spot contracts, deliverable platinum contracts, but there's no platinum in the vaults in London or Switzerland to deliver. You look at the chart that Ed Steer, that your dad has showed it about Ed Steer, the shorting on COMEX, it's silver #1, platinum #2. There's a lot of value in platinum, but the spreads are high because the availability of product is low. it's a strange time, and maybe the reason you're seeing the Eagles go up is that when a lot of the new clients that we have, the big orders that we are doing, the people want gold and silver Eagles. There's a certain level of comfort for a lot of people. You have, as we've talked about at length, 11 states already that recognize precious metals, many of which is specifically gold and silver Eagles, as legal tender, and the U.S. Mint can't keep up. So the primary distributors who buy all of the large shipments from the mints, when the mints run out of product, the primary distributors now become the de facto market makers, and it's a function of supply and or demand. Spreads are very high right now because the price is getting higher. I remember, just a few years ago, like even with $1,500 gold, you're talking $30,000 for a tube of silver Eagles. Now they're almost $80,000, and so cost of inventory is getting higher. Our premiums are going higher. And there's volatility that we expect to see based upon what we have seen for a very long time. But maybe the rules are being rewritten. Maybe things are changing. Maybe the government, for once, is going to let the price go higher instead of stepping on it through levered futures contracts. Maybe this has a lot to do with all the metal coming back, the reclassification of silver as strategic or critical, all of the talk of gold being woven into the back end of the treasury market. He who has the gold makes the rules, says Trump. There are a lot of reasons to think that maybe this time is different. Now, usually when you hear that, you should run. This time is different. But I will say it does feel different. Ultimately, we'll have to see how it plays out, but I don't ever remember in all of my years doing this, Elijah, which is almost 36, seeing a market with this continual strength, and every time it's hit, it just comes right back. That is a characteristic that is certainly new, and feels like, they're just going to let it go much higher, in particular with gold, making the revaluation at some point much easier, and increasing the value of the holdings that they have. And if they really are going to revalue it, like a lot of people talk about, myself included, James Rickards, Mike Maloney, the Federal Reserve, Senator Lummis from Wyoming, keep on going on, Judy Shelton, if they do, starting from a much higher peak or plateau, from a much higher base, would be beneficial to them. And when you see banks saying, okay, now it's 4, now it's 5, now it's 6, they keep on raising their targets, which is interesting. And I don't know, I think honestly that this system needs to go back to some form of truth, some form of credibility, some form of trust, because what we have right now is really failing on all of those accounts, not to mention fiscal irresponsibility. We talk about, August being a huge month for tariffs, like 85 billion, yet the deficit for the month was 350 billion. So our spending is out of control. Our reputation is maybe irrevocably damaged. And the biggest money in the world is showing you, whether it be the central banks around the globe or now the institutional traders here in the United States, or whoever the hell it is bringing in billions a week in gold and silver into COMEX, that these metals are far more important than the currency that is being used and conjured up to purchase it. And honest to God, in my soul, I feel like this is just the beginning. I guess we'll see.